Ladies and gentlemen, the grind continues. We're on it, baby. Who else is going to report earnings today? Well, you may ask because there's so many great ones. Let's talk about AMD, okay? This is a stock. It's a hot one. Can't lie to you. Hot stock. Gotta sit cross-legged because I just feel more zen that way. Over the last year, obviously, the stock's seen some fortune, no doubt. Nothing too crazy. It's up 53%. Now, in my opinion, a little bit lower, but if you look in the 5-year range, obviously we're seeing a lot more movement. Over the last year, though, not as significant movement as you might expect. It is up 3.5% after hours after these earnings are reported. So we'll take a look at what kind of data we have. All I know is this stock's, really this company as a whole has been doing fantastic things in terms of just their business as a whole. This is one I expect some really good numbers on because you've noticed that the gaming segment, just as a whole, the whole sector has been up by massive margins over last year. Even just year over year from 2020, all record year or all record quarters, all record months so far in 2021, still even over last year. So these are incredible numbers. And they're continuing strong, which is a great sign for AMD. It means they're going to be doing some great things, which I'm guessing is why the stock's up a little bit after hours. So let's take a look at this bad boy, see what the earnings are looking like. So AMD non-GAAP EPS of 52 cents is a beat by 8 cents, and a GAAP EPS of 45 beats by 7 cents. Not all that bad. I mean, that's a pretty good beat. This is a company that obviously is working its profitability line pretty nice. They're doing good things, putting up some good numbers. I like that profitability line. I do. You know what I like even more? Have you seen this revenue line? $3.4 billion, up 92% year over year. That's right. It's a beat by $270 million. It's a nice beat. I almost expected more. Can't lie to you. But at a company of this size, that's a big beat. That's a really big beat. You talk about a company that's making $30 billion, that would be a $2 billion beat, by the same metrics. So really nice to see those numbers. And a 93% growth year over year, you can't turn that away. As I said, the company's doing great things. And they are giving guidance. They're expecting revenue of $3.6 billion, plus or minus $100 million, and that's against a consensus of 3.26. So they've beaten the guidance as well. So that's every facet of the earnings report. It's a beat. The main three, obviously, top line, bottom line, obviously with overall profitability and revenue, and then guidance is another check mark you have to hit. If you hit all those, it's going to be hard for these bum investors. That's right, they're bumps, to make the stock go down. These short-sighted people. That's me smacking them right in the face. Because they don't think about the long term, baby. Long term. But that's a great number there. And for the full year, they're expecting revenue growth of 50% over 2020, driven by growth in every single business, up from the guidance of 30% annual growth. Are you kidding me? I mean, they're even seeing better numbers than they thought. It's crazy. Let's look at some finer details. It's hard for me to look at the finer details, obviously, as I'm blind as a bat, it's a fair comparison. I don't even have the sonar, though, to use as a backup, unfortunately. I wish I did. The ears, not that effective at sonar, frankly, and I need to work on that. I'll train myself. Don't worry. I was told once, if you take the glasses off, your eyes will heal themselves. They'll adjust. I haven't tested it yet. Let's just see. No, they haven't adjusted yet because I can't see a word that's on this monitor, and I'm a foot from it. So obviously, great numbers there. Computing and graphics revenue at 46% year over year and 7% quarter over quarter. It's good to see a quarter over quarter growth, obviously, because Q4 is the biggest quarter for this company. Yet in Q1, they managed to do over the business that they did in Q4. Good to see that. came in at $2.1 billion versus a $1.9 billion consensus. Client processor ASPs, average selling price, if you're not in the know, like someone like me is, kind of a big deal around here, but it's up to you. We're up on the year and quarter due to a higher mix of Ryzen desktop and notebook processor sales. And again, as I mentioned when we were talking about Microsoft, we've seen overall PC sales hit record levels in this first quarter of the year. People are buying computers, no doubt, and that's beneficial for AMD, obviously, as they have processors and chips that are within these computers. GPU average selling price was up on both periods due to high-end Radeon products. That was rude of me to belch. It really was, but it's been non-stop videos for a solid 40 minutes. Sometimes you gotta do it. Enterprise embedded and semi-custom sales were up 286% year over year. That's incredible. 5% quarter over quarter to 1.35 billion versus 1.28 consensus. The year-over-year growth was due to high semi-custom sales from the game console refresh. What a shocker. And strong Epic sales. That's not a shocker at all. Again, we expected these numbers as gaming is doing incredible. It's a huge part for them. Gross margin was flat on the year at 46%, which is good. You like to see that. You really do. And the guidance, again, looks beautiful. We'll take a peek at the press release, see if there's anything else we might be able to see. Obviously, we see that EPS tripled year over year. Fantastic. No shocker, the company's a lot more profitable as they get into a point of, a great point of maturity, really. The net income line, which I like to see, up 240% year over year. $55 million of net income. It's actually a really good number for a company making only $3.5 billion. You can just tell as the company grows, it actually likely boosts that profitability number, which means as they boost the percentage in terms of margin, you're going to see only a better net income line, and it's already an incredible standpoint for where this business is in its life cycle. I like to see that. I accidentally hit something and it went down, so don't mind me. I'll just scroll right back up if you don't mind. But yeah, I guess that's really all I needed from that. It's really nice to see. Quarter over quarter down 69%. They just wanted to play games there. That's funny. Now that's funny. Okay? Obviously, we see great quarter one results. Obviously, stuff here we've already talked about. It. I don't know. They did 1.78 billion in the prior quarter. That is incredible, which is including a tax benefit of 1.3 billion. So that would be why you see that decrease quarter over quarter. Not a shocker to me. Year over year is what I care about. Massive stuff. It's massive growth. Good grief. In terms of segments, obviously we saw computer and graphics doing great numbers there. We saw these numbers already in the last little segment. Nothing crazy. They talk about obviously some new processors as well as Epic CPUs that they're working on and different partnerships, which is really nice to see. They're able to do a lot of good stuff. This company, I'm telling you, Lisa Su, incredible CEO. I don't know how it's possible, but Lisa Su, great job running this company. I mean, it's incredible. We're going to scroll down. We're going to find this balance sheet. Then we're going to take a drink after that, okay? Getting a little parched. We got dry throat. Feels like the Sahara Desert in my mouth right now. My tongue may turn to dust shortly. Let's be clear with each other. Gonna go have to get a beverage. And I said beverage. So again, this is a company giving me a quarter over quarter comparison in the balance sheet perspective. I don't hate it, but I much prefer a year over year because it gets me a good feel. It makes me really feel good about what I'm looking at. But total current assets sitting at $7.2 billion compared to $6.1 billion of a quarter ago. Growth overall in most areas, pretty well every area. Pretty nice. Total assets in general sitting at $10 billion compared to $8.9. Really impressed actually. for a company this size, obviously pretty decent asset line, no doubt. And it grew by $1.25 billion. It's good to see that. Total current liabilities sitting at $2.8 billion compared to $2.4 billion. Slight growth there, no doubt. Long-term debt didn't see much of an increase at all, which again I like seeing that. We'd like to see long-term debt stay low. Total. That's a weird way to say it. Total stockholder equity did see a rise on the quarter, which you like to see. 6.4 billion compared to 5.8. Good increase for only a quarter for this company. Sorry. I like where the balance sheet's at, and I like where the balance sheet's going. The rough part when you got a face cam is if you cough, it just looks rough on you. Coughing faces are not beautiful, and my face is never beautiful to begin with, so it makes it tough on us. I feel like the rambling's at an all-time high, so let's talk about it. This stock's worth buying, okay? On the full year, this company likely is going to bring up a line close to right around $16 billion. Right around 16, in between 16 and 18 billion. Trading a market cap of $100 billion is not overly expensive, all things considered. We're talking about 6 to 8 times the valuation potentially. Not really all that expensive. PE ratio sitting a little bit under 40 now, obviously. Actually, after the bump up today, it's going to be still over 40, I should say, after this after-hours movement. So, it's not necessarily a cheap stock, I wouldn't say. But for the growth rate you're getting, this is a stock that warrants a more expensive valuation. You need to consider that when you're valuing this stock. If you're growing your revenue line over 50% year over year, don't mind the shake. I just, kicked the desk, and I think I broke my toe. But when you're seeing revenue growth of 100% year over year in terms of this quarter, but 50% for the full year, it's a company that warrants a more expensive PE ratio and market cap than what you might necessarily consider at a fair valuation. And just in general, the market as a whole, it's trading these stocks high. PE ratio for the S&P 500 over 35. It's expensive out there. So a company like AMD, I think, deserves that valuation. And I do think it's one that'll still provide decent returns in the long term with what they're able to do. So if you're interested in holding a tech stock long term, AMD is a good choice because they're offering a great product and a relatively diverse selection. So hope you have a great one.